If I showed you two rental properties today, most people would choose the wrong one. Property number one is brand new, beautiful finishes, luxury neighborhood, amazing photos. And property number two is a three-bedroom, two-bath house in a stable neighborhood with good schools, average finishes, and absolutely nothing exciting about it. So most people would probably choose the first property. I would choose the second one every single time because after almost 2 decades in real estate, I have learned something that most investors discover way too late, that the properties that create the most wealth are usually the ones nobody gets excited about. And today I'm going to show you why boring rental properties often outperform flashy investments and why boring might be the smartest invest strategy you can have. You might think that having a boring property is going to make you money. You're like, what are you talking about, Nancy? And I'm going to just show you how boring properties hands down will make you more money over the long haul. When we think about rental properties and renovations and everything, where do we all go if we have never done this before? We go right to HGTV. I'm guilty of it. I did it. I would always watch HGTV and I'm like, oh my gosh, I want to like renovate that property like they did. Put in all these high-end finishes and just trick it out so that it looks really amazing. But the thing is, I forgot my investment strategy, which is rental properties. And so over time, if I make luxury improvements to a rental property, it's not really going to give me my bang for my buck on down the road because a tenant's going to live there and the tenant is probably not going to appreciate all of the hard money and all of the time and effort I put into really doing out great finishes. As an investor, what we want is we want cash flow, we want appreciation, we want the numbers, we want our investment to make us money over time. So in the end, all of those HGTV and reality, how to flip a house shows have taught us to chase beauty. But really what happens is that becomes the enemy of profitability when it comes to owning single family investment properties. Boring is predictable. Boring wins every single time. Boring properties are easier to rent. So take my example. If you have 3 or 4 rental properties within 1 mile of one another, and you took money and put in fancy countertops, or you repainted all the cabinets, not because they needed it, because it was the latest trend, and you think you're going to get $100 more a month in rent when the other properties, let's say they're all renting for $18.50 a month, and you're trying to get $19.50 or $2,000. Most tenants are going to go with the $18.50 price because that's more money out of their pocket for your high-end luxury. So boring and predictable properties will rent 100% faster than any luxury upgrade rental. They're easier to finance because number one, you're just doing simple, basic renovations. You're not going in there and putting in quartz countertops. You're not going in there and putting in high-end fixtures and light fixtures and things like that. Lenders love conventional, simple properties, and you'll get better terms and lower rates because of it. They're easier to manage. Same with putting appliances in. I don't buy high-end appliances, so we buy standard appliances. Usually they're white, maybe they're stainless steel. It depends on the property, but we don't go all in high-end on appliances either. That's easier to manage, less repairs, and if I have to replace it, it's not a costly repair. And then lastly, it's easier to sell because I have that's the largest buyer pool of first-time home buyers. So if you have a three-bedroom, two-bath home that has been a rental property, now you want to sell it, chances are you're going to be able to sell that property very quickly. And I know I've done it. I have had properties. My buy box has always been three-bedroom, two-bath, 15 to 1,700 square foot home, no pool, fenced-in backyard, two-car garage. And those properties, and I can tell you from my own personal experience from the last 20 years, those properties rent all day long, all day long. And as a former property manager, I can tell you that the fastest renting properties were three-bedroom, two-bath, two-car garage, 1,500 to 1,800 square feet, no pool, in a neighborhood that had a park maybe or something. It didn't even have to, and it had no upgrades in the property. So that's what people are looking for. They just need, it's like a starter home. Think of it as a rental starter home. And the houses that most investors overlook. I've worked with people who they want to buy very high-end homes. They want to buy properties that are $400,000, $500,000 homes and think they're going to make good rental properties when in fact they're going to sit on the market a lot longer for all the reasons I just said. So, number one, it's the average neighborhood. It's a 3 bedroom, 2 bath. The reason I don't go for big houses is when I have to fix the roof or the fence or paint the whole house or the foundation. The bigger the house, the more my cost is. So, from an investor standpoint, stick with my buy box. And the thing is, when I've veered from it, where I've bought like a 2 bedroom, 1 bath condo or a 3 bedroom, 1 bath house, what happens is it didn't sell, it didn't rent, and it just wasn't my best buy. Now, why does it work? Because that's where most renters live. They want to live in something that matches demand, curb appeal. It's not exciting to talk about, but it's the most reliably rentable type of property that you can purchase. And so what do renters want? So if you're the investor, put yourself in the renter's shoes, if you will. So they want safe neighborhoods. They have a functional floor plan. They want to have good schools. So one of the things that I look for, I look at crime statistics, I look at school ratings, because when I'm buying an investment property, I already know that I'm going to be renting to more than likely a family with kids. And I also want reasonable rent. So most people that are renting, they're doing it for a few years. Some people, I've had renters that have rented from me for, 10, 11, 15 years. Most people are renting around 3 to 5 years because their goal is to buy a home. They want affordable rent. So if somebody's renting a 3 bedroom, 2 bath house for, between $15 and $2,000, that's kind of more doable than a rent that's $2,100 to $3,000. Because especially if the family has one or two sources of income and something happens to that income and they can't pay your rent, then you have another problem. They're looking for the schools, the reasonable rent, making sure it's a safe neighborhood. So there is a maintenance advantage to boring. So if you have simpler systems, smaller footprint, you're going to have lower repair costs. And in the end, that goes to your bottom dollar. So if you have, let's say, two different rental properties and one property has a pool. It's 4 bedroom, it's 2 story, it's very nice. It's in maybe a nicer neighborhood. And then you have the house, it's a 3 bedroom, 2 bath, it's only 1,800 square foot, no pool. So, number one, what happens with a pool? Who is going to take care of the pool? You're going to have to hire someone to manage and oversee that pool. If you're renting to someone with kids, then like in Arizona, we had to have special locks, a special gate around our pool. You have to make it pool safe or kid friendly safe. Otherwise, there could be a liability issue. Pools get cracks, pools and tears. So that's just who needs the headache. Speaking from experience, I've had a couple rental properties with a pool. I would never do it again. Too much maintenance, too much cost. I like simple. Simple means that the bottom line is not going to be higher than what I've already anticipated. Replacing an AC unit for a 4,000 square foot home versus a 1,500 square foot home, you're almost going to double your price because you're going to need probably two systems. So, and there's less deferred maintenance. In Texas, we have a lot of foundation issues, and the cost on a 2 story home is a lot more expensive than on a 1 story home. So, just in the mechanics of how to do repairs and whatnot, having a smaller footprint house makes sense from an investor standpoint. Now, I'm going to share with you from my property management days. So, the thing with tenants, is when you find a good tenant and they pay rent on time and they take care of your property, then the real money is made with those types of tenants because you don't have turnover. You're not having to pay to find a new tenant every year. The money is made when your tenant stays because they're the one, especially if they're a good tenant and they're taking care of the property, they're reporting maintenance issues, and you don't have all of the deferred maintenance from when someone moves out. Now, let's just look at two different examples of kind of what I'm driving home here. So we have a luxury property. A is a luxury property. It costs about $600,000 to purchase this. There is high tenant expectation because on a property like that, the rent was right around $4,800. We needed to find a tenant that had 3 times the amount of rent as far as income. So that means that tenant had to have had a monthly income of over $15,000 just to rent that property. There were high tenant expectations. There were elevated maintenance costs because this particular property did have a pool. It was a two-story and it was about 4,500 square feet. So the other thing is that it sat on the market because there's a smaller rental pool. First, we had to find somebody that had decent credit that made over $15,000 a month. It sat on the property for actually, it took about 2 months to find a tenant for that property. So there was lower monthly cash flow because the $4,800 that we were charging for rent did not cover the mortgage on that particular property. And then we have what was more kind of the normal of our portfolio was property B, where it was in a working family neighborhood. The purchase price was $275, and actually during the time it was a little bit lower even. And there was constant demand. So when that property became available, we could rent it within days. It was just for however long it took us from one tenant to move out to the next one that moved in. And a lot of times tenants just stayed there. We had lower maintenance costs because the property itself was smaller and we had a larger qualified tenant pool to pull from. So when you're thinking about investment properties, it's not just, okay, is this a good deal in a good market? But if it's going to be a rental property, who who is going to be the people who rent to your property? And think about this: how many people in that pool can you choose from? So most people are drawn to property A because it looks cool. It's like, hey, I bought this $600,000 property. Investors that are a little bit more quieter, we like the smaller things. We like the boring because we know boring over time makes us more money. The splashy kind of sexy properties, not so much. I mean, yes, they look good on paper. Yes, if you can find a good tenant. Yes, if they make a great short-term rental. Yes, if you bought it right. So maybe you bought that $600,000 property and it's really worth $1 million. Then yes, that's a good buy. But what's your exit strategy? That's what you have to ask yourself. So the danger, I call it sexy deals, right? So it's exciting, right? It makes you feel like, oh my gosh, I've just made such a great purchase. I've increased my net worth and all of that. But yes, you have this property that's very high and you can do it for short-term rental properties. But here's the thing: the short-term rental market changes, doesn't it? Or the HOA decides that you can't do it anymore. When I buy investment properties, I always go, what are my 2 or 3 exit strategies? So if you buy a property for short-term rental, what happens when the market changes? But what happens if that market should change? So here's what I actually look for. So I'm looking for strong rental demand. So when I go into a market, I'm looking for a few of these things. So number one, I want to know that there's good schools and there's a demand. I want to know how many days does it take to rent that property? What is the vacancy rate? I want to know that it's in good schools. They don't have to be tier A schools, but they also don't have to be F. I also look at crime, cash flow, property taxes, and just in the area, does it provide stable employment? Is it someplace that families want to move? So real estate investors that own boring properties are the ones who are actually making more money in the long run. So one thing, and depending on the area that you're living in, what I see with a lot of women is that they want the HGTV turnkey rental property. And I can tell you that just doesn't exist in terms of boring. So if you are thinking, or this is what is holding you back, I need to find the perfect deal before I can start, is what you really need to be saying is, I need to find a predictable, stable, manageable deal that performs month after month without drama. And because we teach you how to keep your daytime job, do you really want a rental that's going to cause you drama? I don't think so. So what these boring properties are really building for you is income. They're giving you stability. They're giving you options and giving you long-term wealth. That's what boring properties give you. How does it continue to build wealth for you? Boring actually scales into wealth. That's what I love about them. That's been my choice of investment all these years. So you stabilize and optimize. Lenders love single family homes and ones that rent. So when you can show, because when you go to refinance your properties or buy, what lenders typically will do is they will look at what they call a 25% vacancy rate, meaning, you can show that the property rents 12 months, $2,000, but they're going to say, well, we're going to say, well, not all the time. Then we're going to put in a contingency there. But when you learn how this system works with these boring properties, then you can reinvest and repeat. And the equity that you're building in the properties is what you can use to buy your next property. So you buy your first property, and each one that you learned, the single family, you buy the same boring type of properties over and over again. That's how you build strong wealth and a great portfolio. So the best rental properties are often the one nobody talks about. There's no bragging, there's no Instagram stories about those. The only time you'll see those kind of stories is if it turns into a hoarder home. So the best properties to invest in are the ones that nobody talks about, no one puts on Instagram, and they're very stable and dependable. So if you're someone that's been evaluating different properties, what maybe you should look at: boring makes stable, stable makes money. And if this has really got you thinking about your next steps, check out the link below and go into our resource center where we have a lot of tools and guides that will help you in buying and locating your first rental property.